I work for the largest insurer that you've never heard of. We don't market our brand to any customer on the street. We work through other people's brands. So you can imagine for other people to entrust us with their brand, and Mark was kind enough to mention some of the ones that do, they have to really be pretty convinced that we're going to treat their customers with some respect, dignity, and give them satisfaction. I entered the financial services industry by accident in 1996. I was made redundant from a mining company, and I thought, well, I'll get a job to tide me over until the next mining opportunity comes along. That was in 1996, and I became totally fascinated with the whole world of insurance claims. And since joining Ageas, I've become even more fascinated because I've got the strange sort of context in my business that we work behind other people's brands, they sell the product to the end customer, and the only time Ageas ever touches that customer is if they have a claim. So we only actually ever touch 10% of the customers who buy our product. And indeed, those customers are having a bad day when they actually contact us. So there's quite an interesting challenge to work through a fairly typical call center operation, as you'd expect in a financial services industry these days, to get that sort of empathy with the customer, and more importantly, deal with 500,000 claimants per year who have got an entirely different claim from the other 499,999 people. No two claims are ever the same because the customer involved in the claim, apart from the circumstances of the claim, the customer involved in the claim are entirely different and therefore will have a different attitude to where they're coming from within that claim. Before starting on a few slides, Mark asked me as I came in late as usual to the presentation this morning, can you tell me something interesting about yourself? I said, I work for a Belgian insurance company. Yeah, you've joined the dots, well done. Okay, so walking a mile in their shoes. What I'm going to do is talk about something that we've created called the Ageas Way, and then actually work through a model that we actually use to help us get into the shoes of our customers. Because as I say, we only ever actually touch 10% of them, so that's actually quite a difficult issue to get over, is how to understand how our customers are thinking about us. So the Ageas Way as a concept was introduced in 2003. We're inspired by something rather grandly entitled systems thinking. People like Russ Aikoff, Toyota, Deming, and particularly work by a chap in this country called John Seddon, who some of you will have come across from the Vanguard consultancy. I've done a lot of work, and my team sort of got together, and I think this is quite important. We came up with our own version of what the Ageas Way should be. So we haven't just copied what everybody else has done. We've looked at what's out there in the marketplace and come up with our own thing. And that was very much a homegrown initiative. And key themes within that initiative are things like systemic thinking, optimizing flow, single flow, avoiding batching, absorbing variety, and a key one, and I think one that's resonated out of the two presentations that you've seen so far today, is that people are best. In every circumstance when you're dealing with a customer, people are best. And that's why I absolutely endorse comments like no IVR, self-service via the web to some extent in an insurance, particularly a claims context, is something that certainly I will resist as long as possible, because I think when you're stood at the side of the M62 with a bent piece of metal, shaking all over thinking I'm lucky to be alive, the last thing you want to do is go on the web. You may disagree. And I think immediate intervention is very important. And how do we get that? Well, it's all about understanding the demand that our customers are placing upon us. Now, traditional customer service centres, call centres, typically plan and manage via call data. How many, how long, when? But what I've found when I've gone to call centres is they infrequently ask why. Why did the customer call us? And really sort of try and understand the nature of the demand that the customer is placing upon you. And because of that, we've come up with something called the check, plan, do model, which is all about understanding our system as an organization. Anybody who knows the Toyota production system will recognize it's a very similar model used in Toyota, with one of the, it's changed into a triangle instead of a square. We call it check, plan, do. It's understanding your organization as a system, planning, i.e. identifying levers for change, and then taking direct action on the system often, not leaving it for some IT release in next year or when a particular project has delivered. Actually being brave and perhaps to some extent arrogant enough to take action on the system almost on a daily basis. And quite often you get it wrong, but then you change it again and get it right again. So in terms of check, as I said, it's all about understanding the organization as a system, and it's very much about observing the current process. In this sort of model, a manager who sits in an office divorced from a call center is of absolutely no use to me. If the manager isn't walking about, listening, using these ears, just listening, just walking past the people dealing with customers on a day-to-day basis, not even necessarily listening directly to the call, but just listening to the volume, to the way people are talking on a telephone. Just listening to what's going on is a very, very valuable process. And very much about understanding how our processes are working for the customer today. We might have designed them 2 or 3 months ago, and 2 or 3 months ago they were all going really well, but the context will have changed. There might be a storm. There might be a huge crash somewhere, a number of people injured. There might be a flood somewhere. So the context has completely changed. So understanding how your processes are working today. And most importantly, from the customer's perspective, we all work in heavily regulated industries where we find we put in processes, and when we really analyze why we've put that process in place, it was entirely due to just to satisfy a regulator or to satisfy an internal need. I think we have to be brave enough sometimes to tell our regulators, actually we think that's not good for our customers, and this is why. And how we understand demand, basically in Ageas, we categorize all demand. And demand in our world is usually someone ringing us up. But it could be someone sending us an email, it could be someone sending us a text, it could be someone sending us a letter, good old-fashioned letters, remember those. And that customer is then placing a demand on the organization. We categorize it into value and failure. If it's value, it's something like, I'd like to make a claim, please, or I'd like you to give you some information that allows you to settle my claim. Big tick, we want that. So those are categorized as demand that we want. Failure demand is the demand caused by the failure to do something or do something right for the customer. So for example, it's you didn't explain your process properly, so the customer rung back 2 days later and said, a bit confused, what is supposed to happen to me? It's the design of forms and letters, policy documents. It's the failure to take action on information when it's provided, and it's inadequate capture. And when we looked at it back in 2003, we actually worked out that 65% of the telephone calls that were coming into my call center were entirely unnecessary and were around failure demand. So since 2003, we've been on this campaign, crusade, to reduce that level of failure demand down to much lesser levels. You never get rid of failure demand completely because we work in a system, and systems change, contexts change. Your staff turns over, you change something in IT, it has an unthought of impact. But you can bring it down quite dramatically. And the impact of that on the customer is hugely increased satisfaction rates, and the impact internally is hugely reduced costs because there is less demand being placed on your business. But you do have to chuck away some of the things that are in the call center manager's handbook. Things like the most important KPI is 80-25, answering 80% of calls in 20 seconds and not abandoning more than 5%. I have never had a customer complaint written to me that said, you took 25 seconds to answer my call. It's all about what actually happens when you get through. And in an insurance context, we do occasionally get situations where we cannot possibly answer every call in 8025 because there's just been an enormous storm and thousands of people are trying to get through. We had a storm last year where a whole month's worth of claims tried to intimate in one day. You can't possibly have an organisation that can go from level state to bringing in a month's worth of activity in a day. So your service levels, if you were measuring simply 8025, do start to slip. So you are then dealing with people who've been on the phone a little while and they've heard your rather sexy hold music for a little bit too much longer than they hoped to. So it's all about how you engage with that customer once they eventually do get through, how efficiently they get through to the process, and whether they then feel, right, okay, I can understand it. There's lots of us trying to get through at once. Bless them, they're doing their best, but they've got me all sorted out now. There's a builder on the way, whatever it might be. So we frequently use entirely inappropriate measures to try and judge what we're doing in terms of a customer. And the final thing we do on failure demand is decide whether it was predictable or unpredictable. If it was unpredictable, it was probably down to one of your staff having a bad day. And more often than not, they're one of your better staff, and it was entirely uncharacteristic, and they'll never do it again. But if it was predictable, then if it's predictable, you can manage it out. If you can predict a failure, then you should be able to prevent it. And that's the whole sort of raison d'etre behind the whole thing. So moving from check to plan. So we've got knowledge, we're understanding what's going on, and we're thinking we've got a pretty good reason, we've got a pretty good idea why customers are calling us. Then what we have to be very wary of is the person who walks into your office and you ask a question, why is this happening? And you get the answer back, well, I think it's because. If you get the answer back, I think it's because, send them straight back out the door and tell them don't come back until they can use the phrase, I know it's because. Go and get facts. Management by opinion, particularly in a customer service activity, is completely false because the opinion of the person, the context of the person, is entirely different to 99.9999% of the context that your customers are in. So how can he think this is why something is happening? Go and find out. Identify your waste, failure demand, your inefficiencies, if you like, whatever you want to call it. Look at your value demand and realize that value demand and the order it comes in dictates the priority, and then ready to plan changes. So you've gone through a fact-finding part of the work, and then that leads into a distinct plan, which you can then mobilize. And some of the principles that one uses for redesigning your processes, and this may not be, by the way, redesigning your IT. IT is a system condition. By and large, you're stuck with the system you've got. You might buy a new one every 10 years, or you might redesign the one you've got every couple of years. So for quite long periods of interaction with your customers, you're stuck with your IT. You might like to change it, and that might be one of the reasons why you're getting some failure demand, is there's something in the system that's wrong. But tough. That just becomes a system condition. You have to work around that. So IT is a system condition. Assume you can't change that, and then go back to the way you're using the IT and the processes you're using around it, and try and understand where those are going wrong. So you're understanding the system conditions. One of the things we have to understand as an insurer, as a system condition, is we have these customers who buy policies. They only ever have a claim roughly once every 7 or 8 years, and they haven't read the script. They don't know what our script says. They don't know how to have a claim because they don't have one that often. So you get people in all sorts of states of nervousness, being unsure, not knowing what's going to happen to them. They'll have read the Daily Mail last week, which has told them that all insurers are a bunch of shysters that never pay claims. So they are really, really nervous coming on and really not sure what they're going to get. Most of them have never even read their policy document. So to be honest, they don't even know what they're entitled to, let alone what they should be getting. So our guys have to take these people. So your customer is part of the system which you have. And you have to realize that As I say, I haven't read the script. This, for me, is where things like Lean Six Sigma go wrong. Lean Six Sigma was put together by people who make aero engines. And aero engines are bought by people who understand aero engines. That's not the case in the insurance business. So you're doing all these things in terms of matching demand at the front end, minimizing handoffs. All of these things will be things that you will realize when you've gone through a customer experience have annoyed you. There's nothing worse than not being able to deal with the first person you deal with, so handoffs, things like that. Work passed on must be clean. And finally, you come to do. And this is all about making process improvements, having pilots, being in a constant state of pilot. Putting in place process changes, you might get it wrong, you might actually create more failure demand than you've just taken out. Well, take it out again. And then finally, change the IT if that's within your gift. And then, when you've done all that, start again. Because the context will have changed, your customers will have changed. So, in conclusion, the concepts that we use in the Ageas way have come from Deming, Toyota, John Seddon. If you've not read John Seddon, I would really recommend reading some of his books. It's owned by the Ageas staff. There's no consultants been involved in this. We created it, we own it, we get it wrong, we get it right. Understand the demand from the customer's point of view, and that can be internal and external customers, of course. Optimize flow, keep asking why, and usually you get to the fifth why before you really understand why something's gone wrong. Systemic thinking, don't tinker with the bits, beware quick wins and the law of unintended consequences, because if you don't think some of these things through, you will come a cropper. Staff thoughts and ideas are crucial to the process. And finally, the last thing I'd like to leave with you is that get this right and actually you save money. This is a little chart that I'll finish on that's published by Data Monitor every year. This one came out in January 2012, and it shows the relative efficiencies of claims departments within UK insurers. Good is the further down the chart you are. And as you can see, Ageas is right down the bottom there. And is certainly in our peer group of large insurers, and we deal with about 8 million customers in the UK every year, by far the most efficient. And it comes from this approach of giving customers what they want every time. It just costs less money to do that. Thank you very much. Diolch yn fawr. Thank you.